The S&P 500 might single-handedly be the best choice for long-term growth of your portfolio. Is the preeminent benchmark for the US stock market. It represents incredibly successful American businesses. Composed of 500 of the largest publicly traded companies, the S&P 500 has emerged as a preferred investment for both seasoned investors and novices alike for various reasons. Let's take a look at the amazing potential of investing in the S&P 500, explore its historical performance, diversification benefits, resilience during economic fluctuations, and long-term growth potential, in addition to other advantages. Stick around to the end because you'll be surprised at how powerful this one investment can be. The process of selecting companies for inclusion in the S&P 500 is meticulously carried out by the Index Committee. The criteria for selection are stringent and designed to ensure that the index remains representative of the U.S. equity market's most significant and influential companies. The primary factors considered include market capitalization, liquidity, sector representation, and financial stability. Companies must meet market cap requirements, meaning they must be large and valuable to be eligible for inclusion. The stocks must have a substantial trading volume, providing ample liquidity for investors, and the companies must consistently generate positive earnings. The committee reviews the index regularly and makes adjustments to reflect changes in the market or in the financial health of individual companies, ensuring that the S&P 500 remains a relevant and reliable benchmark for investors. These requirements are fantastic for passive investors because the stocks are consistently screened, meaning the research and heavy lifting is completed for them. The S&P 500's historical performance is surprisingly good, with consistent gains decade after decade. Since it was created over 6 decades ago, the index has witnessed an exceptional journey of growth and prosperity. Through turbulent economic times, it's consistently demonstrated its ability to weather storms and emerge stronger than before. The ability to recover from market downturns and set new all-time highs is a testament to the enduring strength and adaptability of the U.S. economy. Over the long term, the average annual return of the S&P 500 has been about 10%, providing investors with healthy long-term profits. This robust performance has not only outpaced inflation, but also surpassed the returns of many other traditional investment options, including bonds and cash equivalents. Although past performance is no guarantee of future results, this historical data reinforces the notion that the S&P 500 is not merely an investment. It's a powerful vehicle for generating wealth and reaching retirement goals. Investing in the S&P 500 is a long-term strategy, so it's important to consider that not every year will result in a positive return. The total return for 2022 was negative 19%, resulting in a major blow to the portfolio of many investors. Those who cashed out their portfolios locked in those losses that would have likely been recovered had they remained patient. A 10% average annual return doesn't seem like much, but when achieved over many years' time, the potential for long-term growth is pretty amazing, even after adjusting for inflation. Don't underestimate the power of compound interest in long-term investing. As investors reinvest dividends and returns back into the S&P 500, they benefit from earning returns on their initial investment as well as on previously accumulated returns. Over time, this compounding effect, even with nominal returns, can lead to exponential growth, resulting in substantial wealth accumulation. Diversification is a critical component of a resilient investment portfolio, and the S&P 500 spans a wide array of sectors such as technology, healthcare, finance, consumer goods, energy, and others. By investing in the S&P 500, you'll own shares of large U.S. companies like Apple, Amazon, Tesla, Johnson & Johnson, Exxon, and many other household names. This diverse representation protects investors from the excessive risk associated with investing in a single company or sector, but provides exposure to a long list of successful businesses. By investing in the S&P 500, individuals own a portion of a wide range of businesses, each contributing to the U.S. economy in unique ways. This diversification reduces company-specific risk, ensuring that the overall performance of the index is not overly impacted by the fortunes or misfortunes of individual stocks. Furthermore, the makeup of the S&P 500 means that larger companies exert a more significant influence on its performance. In other words, you'll own larger amounts of certain companies and very little of others. You'll have more exposure to certain industries like technology, with very little to those like utilities and real estate. This approach ensures that investors are exposed to some of the most reputable and successful corporations in the United States. Warren Buffett, the renowned investor and billionaire, has expressed a highly favorable opinion on the S&P 500 over the years. He's said, "For most people, the best thing to do is own the S&P 500." Buffett has consistently emphasized the long-term benefits of investing in low-cost, passively managed index funds that track the S&P 500. He's repeatedly advised individual investors to embrace a simple and patient approach to investing, focusing on the potential of the U.S. economy and its capacity for sustained growth. Buffett believes that the S&P 500 represents a diversified and reliable investment option, capturing the collective strength of America's leading companies across various industries. His confidence in the index stems from its impressive historical performance and resilience during challenging economic periods. Investing in the S&P 500 aligns with his philosophy of investing in businesses with enduring competitive advantages and staying invested for the long haul, reflecting his belief that gradual and consistent growth is a key driver of long-term success. S&P 500 ETFs, or exchange-traded funds, offer investors a convenient, easy, and passive way to gain exposure to the performance of the S&P 500. Companies such as Vanguard, iShares, Fidelity, and many others offer extremely low-cost S&P 500 ETFs, making it an inexpensive way to invest in broad market funds. By investing in these ETFs, individuals can access the benefits of the index's historical performance, diversification across various sectors, and the potential for long-term growth. S&P 500 ETFs are an attractive option for both beginner and seasoned investors seeking a cost-effective and low-maintenance approach to participating in the success of some of the most influential companies in the United States. By investing in the S&P 500, investors also open themselves up to receiving regular dividend payments. Most ETFs pay quarterly dividends, resulting in passive income payments every 3 months just for investing in the fund. While the yield is fairly low at about 1.5%, investors have the choice of reinvesting the dividends or using them for something else. The yield might seem insignificant at first, but as your portfolio grows, the payments snowball into larger and larger amounts, and in some cases, can be enough to retire on when combined with other income sources, such as Social Security. These regular payments provide a psychological benefit and a reward for long-term investing. Additionally, these payments are made consistently regardless of market fluctuations, serving as an indication of stability in turbulent markets. Investing in the S&P 500 represents a path to long-term wealth creation and financial freedom. Its historical performance, diversification benefits, resilience during economic fluctuations, and long-term growth make it a fantastic investment option for individuals seeking steady growth and wealth accumulation. Not only is this strategy extremely easy and inexpensive, the long-term returns are quite surprising. As the economy continues to evolve, the S&P 500 remains a symbol of opportunity and prosperity, a beacon guiding investors towards a brighter and more secure financial future.